Chris.
He's
Chris,
going
Hey
for the
guys.
what does Chris
Aryan
your
look.
stash, my guy? I can't grow a mustache that big. Mine grows like until here, and then that's that.
Yours is still pretty sick, dude. Like, I'm pretty jealous of yours.
Dude, I can only do this here, so I can't even do that much. Dude, yeah,
You're jealous of
You
his
would fit in
mustache?
so well in France.
I know. I lived there. Wonder why.
All right, guys. Welcome to the Go with the Flow podcast. I'm very glad to have you all here. If you like to introduce yourself, Patrick, he was my first guest in the very first pilot of the podcast when I didn't even know what the name of the podcast was going to be. So I'm very happy to have you back, my friend. And I really love to hear what's your journey been through so far with more markets and everything you guys are doing.
Thanks, man. Yeah, so I'm Patrick. I'm the founder of More Labs. It's a development company that's building out a lending protocol on Flow called MoreMarkets and More Vaults, which is the topic du jour today. I couldn't do the More Vaults project without Filipe and Vlad. So I'll let them kind of take over from here because they have a lot more interesting things to say than I do, I think. Do you guys want to intro yourselves?
Yeah, sure. Should I go first?
You have mustache privileges, Filipe. Go ahead.
Thanks. I'll take them then. So I'm Filipe, founder at Safefields AI. We're building this, DeFi ecosystem for AI-driven DeFi strategies. We optimize yields, and just partnered up with the MoreMarkets for our flagship vault on Flow, which is Anchor Flow Loop. And I don't think MoreMarkets wouldn't be anything without us. I mean, there's a lot of people in this world who could deploy some strategies there, but I'm just glad that we're a part of it. So yeah, and thanks for having me, by the way.
Right on.
And yeah, my name is Vlad. I am founder of Tal Labs. Tal Labs started off as a tokenomics and economic design firm a year and a half ago. It grew to a bigger into something bigger today. It's a vault curator and basically an on-chain fund. We deploy strategies on several protocols and several chains, and met with Patrick a bit over a year ago when we initially started to develop the tokenomic model of MoreMarkets, at least in the iteration that it was back then. And then we just stayed on board and we also started becoming a vault curator. We have two strategies that are live already, and we're working on a third one, which should be a go sometime in the next couple of weeks. So don't hold me to that timeline exactly.
What would be the difference between these strategies exactly?
The assets, the yield sources, what they do exactly. I'm happy to go more in depth. Our the main vault that we have now is a USDF deposit. It takes USDF. This is the PayPal USD denomination on Flow.
Yeah.
Sticks it on Kitty Punch. It's not a super complex strategy, but it does generate some yield, and it is also incentivized with those juicy liquid flow incentives. The next strategy that we're working on is basically a yield optimizer. We're creating a fund of funds type product for vaults, a vault of vaults if you want. We will be allocating the deposit capital to different strategies and different ERC-4626 vaults. First of all, on Morpho, soon on Euler, and then we're expanding it to other protocols as well. IPOR is down the line since our team is quite familiar with their tech stack and we already have a couple of vaults running there. The goal with that one is to get the best risk-adjusted yield from these strategies. Now they're all delta neutral, and we only allocate to vaults that meet certain risk parameters and risk criteria that we have set up. These range from who is the curator, how deep is the liquidity, how big was the deposit impact from our positions going to be, how much yield can we get after all the performance fees are taken out from the source side. And this should be a very nice source of capital to flow in to more, and then automatically, due to another leg of the strategy that we're building, to also have that capital move into flow and have the incentives encourage USDC, USDF, DAI, USDT to also bridge over to flow and for the growth ecosystem.
Right on. Right. I'm actually not an expert on DeFi stuff, so I would really appreciate if you explain all of this stuff like a 5 year old, because it's kind of like my mental age for this stuff. Like the other day, I tried to do like some liquid stuff with Kitty Punch, and it's like so many steps. Like you gotta put like some tokens in a place, you get liquidity tokens, and then you put it somewhere else. So it's just, I'm not very verbose with this, so I really appreciated you taking the time to explain it.
Of course.
I'm happy to do more simple explanation. It's been like on 5 top.
Yeah, you're not alone. That's why we exist.
Like,
whole
what would be
reason.
Literally.
like, what's the best way to make it super simple for everybody? Like, I see MoreMarkets that at least they have like, I don't know if it's 100% true for MetaMask and Flow Wallet, but I know you guys are doing at least batch transactions on Flow side, so things don't take two clicks in order to do a deposit. Do you think like do you think that making the user experience smooth in the sense of just taking clicks off their list makes it easier to onboard?
Yeah, I mean, I think that I think Filipe is going to touch on this topic in just a second, but generally, like with MoreMarkets, it's a lending protocol, so you can supply assets, so lend them to other people, or you can borrow assets against your supply. You have collateral. That means basically that other that lenders can trust you, because if you default on your loan, your collateral gets liquidated. So the concept of the lending markets is fairly straightforward. You only have like 4 actions that you can do: supply, borrow, repay, and withdraw. With the DeFi stuff, like when you get really deep into DeFi and we get into concepts like things that most people don't understand, like basis trading, concentrated liquidity, loops, whatever. For people like you and me, all of these things are incredibly difficult to do. And that's why Vlad and Filipe are here. It's because they're helping make the user experience as easy as just deposit and withdraw. And Filipe, maybe you can talk about how this works on Flow and what you're doing on Flow. Because if you want to generate a lot of yield on Flow and you're not a professional trader, there aren't a lot of ways of doing that easily.
Yeah, sure.
All right.
So we do use wrapped flow as our depositable asset. So what we're doing with our strategy, it's called looping, as Patrick just touched upon. And for those who don't really know about looping, or it's the first time they're hearing it, you pretty much collateralize an asset. In our case, it will be anchor flow, and then you can borrow, let's say, 70% of your collateral, 80% in wrapped flow. You'll do these strategies specifically because those are 2 correlated assets, so your liquidation price, it's a lot lower or almost non-existent. Not only that, but also if you want to expose to one token, you won't get, let's say, some sort of impermanent loss by having 2 different tokens. So this is the baseline for our strategy. We collateralize anchor flow, which is a staked version of flow, borrow against wrapped flow, and then we use the wrapped flow that we borrowed, swap it for anchor flow again, and deposit more. Then we borrow against another chunk of flow, and we do this in a loop. That's why it's called a loop. What this does is, because the native yield of a staked token, in this case anchor flow, it's so much higher than the borrowing rate that you're paying for borrowing wrapped flow, you can have a significant amount of yield on your native token here, which is the flow token. So and this applies to other tokens which have staked version, let's say stake Ethereum against Ethereum, something like that. We want to expand to other assets, to other ecosystems, and this is pretty much an expert way to maximize your yield on your token. Instead of just holding it in your wallet, you'll deploy the actual token as collateral in our strategy, in our vault, and we'll do everything for you. So it's like a one-click solution for maximizing your yield on top of it. And in our case, our core technology, which is machine learning AI based, runs blockchain data, historical blockchain data as we go. and adapt to certain conditions that the market is going through, according to to our human input as well on the strategy itself.
Right on. I remember Patrick explaining the same thing around loops in December. I remember in the Dora Hacks presentation. He was like, "Loops, you get $100, you deposit $100, you get 80, you deposit again." So it's like it made it so simple, but I actually makes me wonder, like, how does it fail? Like, what is the scenario in which this can fail in the moment that you you deposit something and you borrowed and then you get liquidated, and does the loop end? Does the loop goes into like a sort of death spiral or something? Like, what happens there?
Yeah, so that's one of the things that we actually control with our technology. It's the liquidation threshold. It is a lot safer because these two, specifically the wrapped flow vault, is there's two correlated assets. So when anchor flow goes up too. So the ratio remains the same. Otherwise, even so, there are some fluctuations that can happen, and you could be liquidated. But we do control those with a lot of safety, features that we have in our technology that I won't go into here because they're just too complex, even for my, DeFi kind of strategist mind. It's more mathematician, and which is done for our by my co-founder Bogdan, and he's been working with AI machine learning. He's been an engineer for the past 12 years. But it gets a lot more complicated than this. But there are certain thresholds that we have and that the technology just controls, so it will avoid your liquidations in this case. The good thing about this is that we can scale up a lot more because we understand what's safe, what's not. We do control everything that's going on in the market. And not only that, we also do back testing on the blockchain values. We go to liquidity pools to understand the range that things are moving as well. So we do have a lot of control, a lot of historical data that gives us the confidence to control these kind of things that you're mentioning.
Do you have like documentation for all of this, especially the machine learning part? Like, I don't think I even knew you guys were using that.
Yeah. Okay. That's unfortunate. that means that we're not doing a great job explaining what we do. Thanks for that. But yeah, if you go through our white paper, all the information is there, how the core technology works and what we're developing. And we do have some theses that we also share around on the strategies themselves, the risks, etc., and how we cope with them, especially.
Right. Do you guys love it? Do you guys love it working in DeFi? Is it like a fulfilling experience to you?
Well, for in my case specifically, I think this is what it was inevitable to crypto or Web3 to evolve into this. I mean, this is the true value that we have in Web3. Tokens are just tokens. It's just another one. There's
The
not really
true,
much that
like, the one true value is DeFi.
it is. It is. I mean, in my opinion, in my humble opinion, and don't take it too seriously, but I mean, what's another token? Which value can you bring to another, another stock or something? You can't. It's just the project behind it. The stocks don't really matter. What matters is what's behind, and that's what DeFi, enabled us to get into.
If I can jump in, regardless of the downsides of crypto generally, like the scams, the NFTs, ICOs, whatever. If you are a rich person, you have access to have your money work for you. You can go to fancy hedge funds that do fancy strategies that move money from point A to point B, and they arbitrage something. They take a small fee for themselves, and the rest they pass back to you. And the average person, the reality is that best cases, and only in more developed countries with more developed economies can they have access to stuff like mutual funds. A bank on average makes, so I think percentages change since I saw this first, but a bank on average makes like 8-ish% profit on the savings account of each retail account they have. We only see 0.x% of that. So with all of the issues, the problems that crypto had and it will have, through DeFi, you can, if your strategy is good and if your fund is good, you can accept deposits from anybody. not just rich big funds. You can actually open up finance and like more yield for the average person. And regardless of what issues there might come, regardless of how, we're still in an area where regulatorily we don't have that much clarity on this. I think it's fighting the good fight to democratize finance a bit more. Unless you're a
That's
nerd and you don't do math all day, you don't really want to manage your own money. You don't really want to do what Filipe and I do all day. Look at strategies, calculate arbitrages, make re-up application more efficient by 10% or whatever. You can just have a one-click solution and you just pay a small fee. If the rich guys can do it, why shouldn't the average person? If you want a more ideological approach to it.
I kind of feel like that's the idea behind it. It's like, okay, liberating finance, or open it up for everybody. I would like to assume that's like what people in DeFi believe in, or it's just, I don't know. I like that idea. What about you, Patrick? What are you in his? I know you studied finance or economy.
I studied economics and finance in college. I worked in New York on Wall Street when I was younger. And then I kind of got out of that into startup world for a very long time. And when we met, actually, I was totally like disconnected with finance. We were working on like reputation systems and
Yeah.
different forms of value, not financial forms of value. But yeah, I find DeFi to be a very exciting place to build. To be honest, like a lot of the financial strategies that Filipe, Vlad, and other curators run, I find them incredibly fascinating. But I don't have the mathematical brain to do what they do. I'm more interested in building the technology that makes what they want to do feasible. And I work with them on a pretty, like almost daily basis, especially like Vlad and I, we see each other several times a week. Filipe lives in Portugal. I live in Portugal. So we like see each other quite often too. I mean, we cook all the time on what they want to build. And I try, between me and the team, we try to, take on as much work as possible. And sometimes it's a lot. And then we think of like really creative solutions to address many problems at once. And that's where we are right now, actually. It's that, especially Vlad. Vlad's like, I would like to do this. Can we do PT loops? Can we do ARBs on UniV4 or whatever? Like things that are just like, wow, these are new protocols. How do we build all of this in one go? And
Yeah.
very much thanks to both of these guys' feedback, we came up with a solution that is now kind of a core part of the More Vaults protocol, which is why don't we just use the existing strategies that exist all over Ethereum, any chain, and just deposit into those and generate yield from those. And like Filipe is very much focused on building out DeFi in the Flow ecosystem, and soon, I think very soon, deploying a similar strategy on other chains. But Vlad has experience building on other protocols than More, and building strategies that are much more diverse than what he's then like he does more than loops so far. And maybe Vlad, you can talk a little bit about this two-leg double strategy that's going to farm different lending protocols, because to me, this is kind of where things are going. There's going to be like people managing like the heavy tech stuff. I know. Okay, go ahead. I'm sorry, I'm talking.
No. You're perfect. I just you can finish. I just before Vlad, I want to say something.
Sure.
You have a new host, a new podcast host now.
I know. I just wanted to ask you if you could paint a picture of where, what's the trajectory of MoreMarkets so far to this point, where you are right now, and where are you heading from this?
Sure. So MoreMarkets started as something like pretty straightforward, right? It's a lending protocol. I think that Aave was like the main originator of like how lending works on chain. They did a really good job. And then Morpho came out and they did the second version of lending, which I find to be just absolutely fascinating and incredibly powerful. What we decided is that playing in the lending game is very interesting, but there are already very competent companies and organizations that are doing some very creative stuff in lending. The direction we decided to take more is how do you build an ecosystem that's new to DeFi or that's just beginning in DeFi? How do you build DeFi there when you don't have an existing DeFi community and existing native yields. And so the whole goal of More now is capturing yields on other chains, bringing them back to Flow and building TVL around those captured yields on Flow. So I think the next year or so is going to be like basically packaging yield on Ethereum, Arbitrum, Hyperliquid, like everywhere else, bringing those yields onto Flow and creating markets around yield on Flow.
Just building up like TVL.
We're building up TVL and leveraging the yield that exists everywhere else to do it.
Right on. Yeah. All path goes to Flow.
All paths to Flow. all paths flow to Flow.
Patrick, so you asked talking about the strategy that we're gonna have, this second leg of it. Well, it's simply a yield optimizer, as I said. The idea for this one is to function like a fund of funds. So we will get the best risk-adjusted yield that is curated by others. First of all, Amorpho and the Euler. Similar to Safe Yields, we have our own automation and we have our own programmatic methodology where we make sure that allocations or reallocations stay within certain parameters. We don't use AI per se, simply because most of my team were quants and data scientists, and we're absolute control freaks to make sure that every time 1 cent is moved, that we know why it's moved, where, and how much. So we are a lot more, I wouldn't say manual, but programmatic. We don't have the knowledge in house or the focus to build full AI or machine learning infra for our strategies. But in the case of the yield optimizer, we simply look at several parameters. So the idea is, if somebody deposits some assets, they should get, if not the highest, close to the highest average yield from several strategies. And without interacting with it, leaving it out for a longer period of time. Let's say if you were to maximize it fully and we put the risk aside, let's say the yield on those would have been, I don't know, like 12%. What we aim to do our strat is to have just a bit below that, simply because maybe you don't reallocate enough in time. You can't predict the future, so you don't know if the spike on the yield for one strategy is temporary due to one reason or another. So we want to have a lot more consistent yield on it. We look at a trailing average for how consistent the yield has been. We of course look at the composition and the hold. So is the yield source for these strategies coming from lending? Is it coming from fixed rate PT assets? Is it coming from some other points being farmed somewhere and then trickled into the strategy? And then we decide if we allocate or reallocate a certain percentage of the strategy. Basically, as far as the user is concerned, they deposit a certain amount. They deposit $100. And we decide, our bot automatically says, like, look, the optimal allocation in this case for our strategies is 40% goes into this vault, 40% in that one, and 20% in this vault. We try to keep it at least two, to do at least two allocations, for the simple reason that you don't want to have, quote unquote, all of your eggs in one basket, even though these are baskets of strategies themselves. Simply because in the case of a DPEG or something else, the yield would be hit a lot less. It's also valid for the opposite side. If the yield, for a variety of reasons, goes up very fast, like a couple of days, you can absolutely be miss out on that potential extra yield. But on average, you will be close to the highest possible risk-adjusted performance that you can get by yourself. And you do it with no effort, thanks to infra like MoreMarkets, where we can build all of this stuff and have it just to be one click away from depositors. The strategy there is pretty much simple and straightforward. It's not as complex as, like Patrick said, loops or rehypothecations or penalties. Yeah, no, please.
No, so let me see if I understand. You're saying that for the user, they deposit $100, and in the background, you're finding the best percentages of yields between different strategies. And then do you present these options to them, or you just like do it automatically for them, and then you say, oh, we put it here, and this is the receipt, or how does that?
So the strategy does it automatically. We can't really ping every depositor, every wallet, hey, do you want to move here? Hey, do you want to move here? Hey, do you want to move here? Because it would defeat the purpose. All of these strategies, they are effectively in terms of the principal, so the deposited assets. Most of these strategies, they are effectively delta neutral, as we say in finance. This means that you don't go up or down with the market, but the yield you make it from stuff like arbitrage or lending out. That is the actual source of yield. So there's no quote unquote trading involved. It's simply buying money and selling money at very different rates that are different by small margins, but you do it fast enough that it accumulates over time. And to go back to your example, these are deposits $100, and the strategy, we have some documentation for it. It's not too in-depth because the strategy itself is very, very modular, so it depends where we allocate. We look at Morpho, we look at Euler, and we will look at iPort one day soon to allocate in between which are the highest earning, which are the highest earning vaults that have stablecoin denomination, so you can deposit in stablecoins. So let's do an example: $100 deposit on our stablecoin on Flow, on More. $40 goes on this vault on Morpho curated by Gauntlet. $40 goes on this goes into this vault on Euler curated by Mev, and $20 goes on whatever iPor on the vault that maybe we curate. The $20 on iPort get their yield there, the $40 on Euler get their yield there, the $40 on Morpho get their yield there. When the user withdraws, they withdraw all of their principal deposit plus whatever yield they generated, minus whatever gas cost there has been whenever we had to move the assets, and minus whatever performance fees there are either from our end or from the end of the ending protocol. That's why we're also looking to optimize for this as well, because a 10% performance fee is not that much, but then when you accumulate it over time, it definitely affects the performance of the strategy.
I have a question there around the gas. Do you mean the gas on Flow, or also the gas that all the chains you're using for this strategy?
All the chains in general. Gas on Flow is dirt cheap, so we can be a lot more aggressive with rebalances and stuff like that. But when we do strategies on mainnet, and this strategy initially will be on mainnet, gas will cost. Gas is quite more of an impact. But that's the advantage of building on Flow. The strategy that we do have on Flow, we can be much more aggressive with doing very small atomic changes because the gas is almost free. So it's that's definitely a very big advantage when you want to do these very competitive strategies.
But I actually was about to ask that like, why Flow? Like, did you try these somewhere else?
The chain itself is very, very cheap and it's very, very fast. I also personally believe a lot in Patrick's vision for More. We've been working together on the core tokenomic model of it for over a year. So I'm also personally sentimentally invested in the project and for it to work. I really liked the team at Flow as we met, and we started building this thing from a layer one that had almost no presence in DeFi to now having what's the latest big TVL milestone that was passed? I kind of feel that
3 billion. How much?
Yeah.
It's 100 million. We're not in billions yet, but
felt that as a very personal success as well, at least in part.
Yeah, right on. So I think I get a pretty good idea of what MoreMarkets and all of these strategies are about. I kind of like to know a little bit more about, I don't know, you guys personally. Like, what keeps you up every day? Why are you building this? What were you like about this space? And if you were building MoreMarkets or Safe Yields or Cow Labs, what were you building?
McDonald's serving.
That's me.
That's a tough question.
Every Tuesday night.
Filipe is a chef. He's a trained chef.
Oh yeah,
believe it or not. Yeah, he owns a restaurant.
right on. What
Yeah,
kind of
actually,
food?
I actually I can start. I started in culinary arts and sciences. I, figured out very early in my life that I didn't want to work for anyone else, for someone else. So, started my first restaurant. It was 22 or 23. That was a flop, closed up, and then build up from there. So, learn by mistakes, like as you learn in Web3. But yeah, just started from there, wanted to really like to build things, whatever it is, really like to build teams, connect people. And I think the space brings us that. It's been a space that it has evolved a lot. So when I started out in 2016, I think it's almost 10 years ago.
Yeah.
Uh, yeah, things.
How did you get in Bitcoin?
I got scammed. That's how I got in.
Oh, really?
Because that was the space, 99% of the space. That was it. But no, seriously, I started investing in ETFs because I was, very intrigued with the concept of passive income. How can we take more times for ourselves whilst, having enough money to survive and hopefully help other people doing it. That's how it started. And then myself and my younger brother, we got into crypto and then DeFi specifically. Pancake swap was still a thing back then. I think I remember the cake
It's
token.
not a thing anymore.
Come on,
PancakeSwap doesn't exist.
I shamelessly farmed cake.
I think I got cake up to $47 or something like that. It was insane. Made a shit ton of money with that. Lost everything in other scams. That was the roller coaster that I got into crypto, and we kind of got really tired of it. Myself and my brother, and we said, well, screw it. We're gonna start our own thing. It's time to stop all this. And we ventured on a first protocol called Decentralized Foundation. And the concept was we hired the DeFi strategists. We are like very deep into DeFi at this stage. So we hired DeFi strategists, like a big specialist. We minted some NFTs, and you would get an allocation in the fund through the NFTs, just like a normal hedge fund. DeFi strategists just um, put the money wherever the strategy was best. Back then, all of this was manual. And we started, I think it was with a 40K fund and grew it up in 2 years to 180, something like that. And, just wherever there were rewards, we would distribute it to the NFT holders. And that was pretty much it. We didn't take any money to ourselves. We donated every profit to charities. But that was the first experience because we didn't like it was the imposter stream, we didn't feel like
Yeah.
we were worthy of charging people because this was a more of experiment. And then meanwhile I met my co-founder Bogdan, and from his expertise, as I mentioned, he's been dealing with AI machine learning for the past 12 years. He was building this core technology, which is now Safefield's core technology. We call it Emma AI, which just had the power to do what the DeFi strategies did in 6 months in a couple of hours, and that's the true beauty about AI machine learning is the power of the immense process power that it has, and how quickly we can adapt things. We don't really leave anything to the technology itself. There's a lot of human input still, and whoever tells you otherwise, I think they might be screwing with you, or they have no idea what they're saying. But yeah, that's how it all started, and that's how we got here.
So, have you ever thought of doing anything around uh, food and blockchain and Web3?
There was this project. It was very interesting, but I think it's we're still a bit away. I haven't heard a super creative way that sounded sustainable. However, there was this cool project that I kind of thought up with some friends of mine here from Portugal. They make wine, and they bought a farm. So my idea was,
I like it already.
and yeah, but the idea around the project would be something like you divide the farm into like squares or something, and each square is an NFT. You would purchase the NFT, and that would be your allocation of the farm. Wherever the wine is produced, you would make either you would receive the wine at home because that's your wine and you paid for it, or we could sell it retail price and you'd get a profit, an allocation from it. It was super cool thing, but we thought about this. I think it was something like 40 years ago, and I just don't think the market was ready for something like that.
Yeah.
And we talked about UX a lot here before in the podcast, and I just don't think we're still there yet for people to trust these things. They still, NFTs have a very bad reputation nowadays. They were never
I
used the
think
right way, in my opinion.
I think we are actually in a transition of people seeing things differently. Just don't call them NFTs.
Yeah.
Just don't even tell them. I actually I work in a project called Oxygen that was pretty similar to that, in a refi sense. It was around the Navajo Nation here in the United States. It's a reservation. And basically it was like they have a land with cows and trees and they're producing products, and we tokenize those. And there's a marketplace where you can you buy these products with a token, or you get those tokens out of those products and stuff. So I'm actually very interested in this kind of project, and I think at least on Flow, the UX experience can be really, really smooth, smooth out in the sense that people don't even realize what is really going on. And in the end, I feel like in 10 years, everything's gonna be on chain. A lot of things are gonna be on chain, and whoever makes it is whoever can sell it better, faster, and smarter to people.
Well, I hope we get there. I'm hoping so.
Yeah.
We're working on it.
I want wine.
Yeah, I
You
want one too.
you have nothing to complain about. Every time you come visit, you'll have a bunch of it.
What do you be doing, Patrick? If you weren't building more markets, would you be doing drop fetch?
That's a hard question, man. I feel like I work like 18 hours a day on more. I haven't really had time to think about what I would do outside of this.
Okay, I wouldn't even have a life if it wasn't for more.
Kinda, yeah.
I mean, you're having wine this weekend. Actually, you're going to stomp on the grapes too.
That's right. I'm gonna go stomp on some grapes with Filipe this weekend, and hopefully get something out of it, some alcohol and food. I was promised food.
Yeah.
But I don't know. I mean, when I was growing up, I was in Boy Scouts, and I really loved being a scout, and I love working with wood and just being outside. So I think I would probably just be in a forest and like building furniture.
That's so nice. That's so nice. What about you, Vlad?
Where you're sitting looks really nice to me.
Dude, this place is really nice. I'm kind of really I'm kind of blessed to be here. I gotta go soon though. I gotta go back to Denver, to the city, and it's gonna get winter is gonna come. So in the mountain, it's like pretty rough the winter. So I'm just gonna go to the city where the snow actually smells. But yeah, I don't even remember what I was gonna say.
You were gonna pass it on.
Vlad's gonna tell his story.
Yeah, exactly.
So I first heard of Bitcoin like in 2015. That's when I got into it. No, I first heard about it much earlier when I was in university. I was on 4chan and people were talking about it. Then in 2015, I heard about it more on the news. It was after it went up to like $300, like a year later. I thought it was pretty cool. I heard about it before, so I looked more into it. I started liking the idea, and believe it or not, my role in crypto started off very ideological. I was at around that time, I wanted to understand more about the stock market and economics, and a lot of the issues that I was seeing. Satoshi, he talked about them repeatedly on Bitcoin Talk forums, and I started getting a lot into the idea of having decentralized money. Then as the price started growing in 2016, 17, 18, I started being more interested in it because everybody was talking about it. I didn't make a fortune back then, but I made some pretty good profits. I finished law school, so it has nothing to do with my background. But then I made a bet that was it seemed to have panned out. At that point in my life, it was like 2017. I didn't know exactly what I wanted to do. I didn't want to. I finished law school and I didn't want to become a lawyer, so I was really lost. I was young and restless. And the only thing that I was passionate about that seemed to also be more serious was crypto in general. And I was living in the UK back then, so I said, okay, I'll make a bet. I have no job. I made some money off of this last bull run. I'll move to London and I will try and hustle my way into financial services. Because if this crypto thing isn't going anywhere and it's just a fad, it's fine. I will have a job in finance somewhere in London eventually. If it does go somewhere, well, the earlier you are in something new and you understand how it works, the more you can climb with it. And I hear Filipe when he said that they were tired of the scams and stuff, and they decided I'll just build my own thing. It was kind of the same thing. I was like, I can either get lucky and hope I'll keep the money I make somehow, or I can try and treat this seriously and see if eventually I'll have the opportunity to build something in it or be part of it. I don't know exactly what that would look like back then, but I did start working into finance. I did start working in finance. I did start getting cushy jobs in the city of London. Not very well paid because I was a junior back then, but ultimately with the bull run in 2021, I had the big break of being headhunted in several projects. I ended up at a big L1 back then, which was called Zilliqa. I was their research manager. And from then on, yeah, I kept working. FTX collapse happened. 1 year was difficult, 2023, and DAO started growing very, very fast after. And DeFi was my aha moment where, okay, I like crypto, I like Bitcoin, but this stuff I'm actually pretty good at. Moving around the capital, understanding yield sources, doing math, and always thinking outside the box, which is something that I've learned surprisingly working in the type of TradFi people that I worked with back in London. So that's kind of how I weaseled my way into crypto.
Right on, right on. So I have a different question now. So Patrick, you're from France. Felipe, you're from Portugal,
Correct. Yeah.
and you're also from France, Black, or you're from Russia?
I am not Russian. Also, Patrick is as American as they come. I mean,
Hey, I have a French passport.
yeah, my citizenship.
So
I live in Romania. I am Romanian. I lived in France for many years. I studied there. I studied in Italy and lived there as well. And I lived in the UK. But yeah, I'm very
right on.
here.
What do you guys think from all of these Europeans' perspectives? How do you see what's going on in the US with all the crypto stuff?
Do you have another hour?
Yeah, I was wondering.
Is your demographic left leaning or right leaning? So I know which side.
I don't believe in left and right. I think that's a scam.
But left and right believes in you.
I
Then we know what his demographic is.
yeah, I guess I'm
No,
I'm
I'm kidding.
actually from Venezuela. I'm not from obviously not from here. So, but I've been living in the US for the last 7 years, and I'm just here. So everything that happens kind of affects me one way or another, and I just find out even if I don't want to read the news. Um, so but being here is like kind of a bubble. You really have to go out of your way to find out what the world really think about what's going on. So that's why I'm asking.
Well,
Go first, Felipe, or yeah.
yeah, my opinion is, from the other side of the world, so don't take it too seriously. But I mean, just generally speaking, the U.S. economy affects everyone else in the world, either you like it or not. And that's, the only times that affect us negatively is the times that we get concerned the most. It's just that, especially regulations are very harsh here. And all of a sudden, it seems like the U.S. just woke up for that right now. So it took from the first time. It seems like it took a bit more time to understand that this had to had some regulatory conditions in. I also think that the U.S. has been for the past 4 to 6 years very vocal on the things that happen on the inside, which it wasn't so obvious before, and that kind of scares us on this side. But nonetheless, I mean, it is what it is. There's not a lot that you can do about it. It's just go with the flow as you get here. Just don't let it affect you and protect yourself in the best way you can. Is it good for the market? Sometimes yes, sometimes no. I mean, for us, it's awesome because the more volatile the market is, the more profits we can make out of it most times. So that's when, most inefficients come into the market. But, for your average user, it's something that, turns things scary, and that's not something you want, right? You want confidence in the space. I'm rambling about a little bit, but your question was very general, so if you have
Yeah.
a specific one.
I was thinking about like what would be the long-term repercussions. So what would be the worst thing to happen from the US pouring, all of these companies buying into stable coins, buying to treasury, Bitcoin treasuries, ETH, Cardano, whatever. And like, what do you think could be the worst that can happen? Is that like a good sign? Is that a bad sign? What's your just personal opinion?
Regarding stablecoin specifically, I think that the lack of transparency is something that can worry you a lot. I don't know how many years ago was it? As like 2 or 3 years ago, you had the USDC DPEG. That was hella scary, right? It DPEG'd something like 8 or 9%, and it was not the only reason why. It was lack of transparency. Otherwise, the minting of the stablecoin would have to be, it's programmed, so you had to be assured. It's something that, and I mean, that's what blockchain is supposed to bring. When you're backing up something on chain, that you'll have to have reserves on it and private companies backing it up. It's the transparency part. I think that's what scares me the most, which is non-existent in most cases. Yeah, I would say that's worst case. We don't have access to what's going on inside, which is kind of the case that happens around. So you have to trust these, big entities, and there's always something at play behind the scenes. Worst case, they don't agree with each other, and we're all screwed. But that's a whole world problem, not only crypto, I would say.
Right on. Do you have anything that worries you about what's going on here, Patrick?
You mean with the stablecoin stuff?
With any, yeah, or in crypto in general, the massive adoption of the US into crypto.
Yeah, I guess yes and no. I mean, I think that the decentralization of money issuance through stablecoins and RWA is a really interesting idea, but it's not something that you can click rewind on. So like once it's done, if this like actually ends up happening, I think that the dollar might become stronger, but the central bank will lose a lot of its power. I think a lot of people see that as a really good thing. Some people see it as a pretty bad thing. From my perspective, it's really hard to like have an opinion about whether or not it's like good or bad. I think the central bank has good things and bad things, and if we're able to decentralize money in the way that we've been talking about, I think Filipe hit the nail on the head. It's like what's actually driving RWAs and stablecoins? Where's that value coming from? And to me, it's still not clear how to make those like the underlying transparent on chain. What I think will be very, very interesting is like, okay, you have treasury backed stable coins now. That's fairly straightforward if you can get some third party to report how many treasuries are held by some company that's issuing treasury backed stablecoin. Where it gets a lot more complex is when we have RWAs that are backed by cash flows. Because then we're like kind of relying on the future value of cash to define the current value of some on-chain asset. And I think that is really there's no objective way of defining that value. I think we'll eventually get there. There's probably going to be some sort of crisis around this if it actually does grow to any significant extent, and then we'll recover from it, and then the system will be better. I feel like crypto always goes through these cycles of like someone has a great idea, it gets perverted, something bad happens, it recovers, and it becomes more resilient.
Speaking of great ideas, if tomorrow Macron launches a token, will you buy
No.
it?
Would you?
We might arbitrage it, though.
I aped in a lot worse stuff than Macron coin, honestly. Yeah, I'm still around.
But yeah,
Brigitte would have to launch a token so we can LP into Macron Brigitte, like Trump Melania.
That's
No one
we,
permanent
we
loss
we
between.
arbitrage the shit out of those.
I imagine. Yeah, that's crazy. I mean, I feel like that was like a sign to the world, right? Having the president of the U.S. government launching a literal meme coin that had 80% of the total supply reserve for themselves. It's like, does it say? What does it mean? What's this? What's going
It
on?
means the scam artist is in the office of the president. But
Either
a
that
dude
or
with
they
like
know
some pretty interesting ideas too. Like
either that or they know
kind of
something that we don't, and they're kind of like behind some like
I
very.
feel like there. Yeah, sorry, I didn't mean to interrupt you.
No, it's fine. It was a small joke.
I feel like there are ways that countries could actually introduce stable coins into their governments or systems and communities. For example, I believe Brazil, there was a private company that launched a real stable coin, and eventually the government of Brazil, I think, acquire or hire this company so they can actually start implementing it in the government systems and having everyday Brazilians pay for everyday things with on-chain stable coins pegged to the real. So I feel like there are good and bad examples of what countries could do with this technology. Um, I don't know. We'll see.
I mean, are you talking about a CBDC, like a central bank issued digital currency?
No, it was a private company, but then the government went and said, "Oh, let's incorporate it into, I guess, the bank or whatever."
Hmm. I think
I don't.
if we ever get to a point where like you have universal income, I have a feeling it will operate in a CBDC sort of way where like the wallets that you can send it to will be controlled. Kind of like food stamps, right? Like when you get food stamps, you can only spend them in certain supermarkets and you're only issued a certain amount. I feel like government, it doesn't, maybe it's not central bank digital currency, maybe it's private, but I think it'll work something like that.
What do you guys do on Web3 besides work? Like, do you explore other ecosystems like meme
Same thing
coins,
I do in,
NFTs?
in work, but for myself, just DeFi. I do more degenerate strategies. I keep
What are you what so wait, let me if I were to ask somebody to give me like a strategy for my money, would you be that guy, Vlad? Like, would you give me like a strategy of what to do with? I don't know what to do with my money. It's not like I have a
me
lot anyway. But
me Tao Labs, yes, very responsible, risk adjusted, very well documented. Me Vlad, and I would just tell you to ape and stuff, or just even go on perps and just 100x long.
what are you be aping off lately? What are you aping on?
No, honestly, the past 3 weeks, I haven't really done anything because the market is choppy. I run a basis trade for myself, but it's not massive size, so I get some yield from there. But I just was focused on vaults. Honestly, that's why I
Have
have a
you
very boring life right now with how much the company grew and how much I have to stay on top of all the stuff that we're building on More and in other places.
So no
have you guys
casino for the
explore
past 3 months.
have you guys explored all other DeFi protocols on Flow, like, or stuff that's going on with, I don't know, Charizard Capital, for example, or Deepin or Froth? Have you guys checked those out?
I mean, I have because I'm in the ecosystem like pretty deep. Um, I think they're all very interesting experiments. Um, I think the thing that I think everyone needs to experiment with the direction they think that all of this is going. But and maybe this is like a little bit short-sighted, but I don't think it is. The effort that we're all putting into what we're building is to create is to make DeFi essentially more sustainable. It's like we all kind of want consistent yield from managed DeFi strategies so that anyone anywhere can just deposit an asset and they know they're going to get about like whatever range of returns on it, and they don't have to think about doing anything about it. And anything that's like particularly creative or innovative or whatever you want to call it is all in the background, and as like a depositor you don't have to think about it. And I think that that's kind of what aligns all of us, and I think that we'll see how this plays out. But right now, what's really big, right, across DeFi is farming points. It's like the theoretical tokens you'll get from getting this off-chain asset in the future. Or farming incentives, which is like basically getting governance tokens as additional yield, and they're in the large majority of cases going to drop in price like over time. We all want to focus on real yields or farming these incentives and just getting rid of them as soon as possible to have them counted as real yield. Am I right, guys? So I kind of.
I love that explanation.
Yeah,
You know,
that's pretty much it.
we can cut it off here if you want.
I gotta go in a second
already...
anyway. I have another call. So I'm
yeah, that was perfect. That was a perfect way to wrap up and close what more market vision and mission really is. I like that. Thank you guys for giving me your time. I would have loved to hear more of Philip's political opinions on what's going on in the world. You know, next time I'll have an extra hour.
Save some for episode 2. You haven't heard mine at all. That's another hour.
Yeah, wait till you get to Vlad's. That's fun.
I'm Eastern European. We have a lot lower filter than you guys in the West. You're more. I don't want to offend anybody.
I have no filter.
And I didn't want to bring in, but you called an Eastern European Russian. That's not something you actually you can do. You're lucky he's on the other side of the world. But
I will forgive you.
I'm sorry.
I will forgive you once.
We can call you formerly Soviet, right?
We were never.
You're closer, dude. You're closer. Careful there.
We were never part of it.
That's right. You're right. Oh my God.
I'm sorry. I didn't mean to offend you. It's just, you know. All right, guys. Thank you so much for having me.
Guys.
Have a good day. See you next time.
Yeah.
Thanks a lot, Noah, for hosting us, man.
See you.
Talk to you guys soon. Cheers.
Bye.